Yes, good morning. And today we are going to have a glimpse of the budget 2022. Yesterday, 1st February 2022, our finance minister Nirmala Sitaramji has presented her budget in 91 minutes, and today we are going to share. But before we start with the basics of the budget, I would just like to share what are the present income tax rates. The rates have not been changed, and currently up to 2,50,000 there is no tax. 2,50,000 1 to 5 lakh the tax is 5%. 5 lakh 1 to 10 lakh it is 20%. Above 10 lakh it is 30%. This is a one basic tax rate, and then surcharge is 10% or if income is above 50 lakhs, 15% if income is above 1 crore, and 25% if it above 2 crore, income is above 2 crore, 37% surcharge if income is above 5 crore, and if there's some more provision of 15% surcharge in case the income is above 2 crore. Income includes those under the provisions of section 11A and 112A. If it is not covered in CD, means above. So surcharge on the amount of income tax payable according to the provisions of 11A and 112A will not be more than 15%. And added to this is a health and education cess at the rate of 4%, which is to label on income tax plus surcharge. Now, up to 5 lakh, if anybody has income, they don't have to pay any tax. So the tax is zero. If somebody has income of up to 5 lakh or 4 lakh 99,999 5 lakh. Once he crosses that limit, suppose somebody has income of say 10,000, 5 lakh 10,000, then he has to pay tax on the entire amount of right from 2.5 lakh. So the tax liability on 5 lakh 10,000 goes to around 10% 5% tax on 2,50,000 to 5 lakh, that is 12,500 plus on 10,000 tax is 2,000. So that with 14,500 plus education says. So like that, the tax on 5 lakh 10,000 is say 15,000 rupees. So apart from that, last year income tax has given us some relief. That's to those people who don't want to opt for certain deductions, tax standard deductions and deductions under Chapter 6A, LIC, PPF, Mediclaim. So those people can opt to for this further lower rate of tax. In that case, up to 2.5 lakh no tax, 2.5 lakh to 5 lakh tax is 5%, 5 lakh to 7.5 lakh is 10%, 7.5 lakh to 10 lakh it is 15%, and 10 lakh and up to 12.50 lakh it is 20%, and above 12 lakh 50,000 to 15 lakh it is 25%, and above 15 lakh it is 13%. It depends on case-to-case basis whether one should opt for that scheme or not. Now let us come to the provisions of budgetary provisions under the budget that yesterday the budget has come. Based on that, we'll see. Just give me a minute, and I will. Just give me a minute. I will share a screen so that you can view the provisions. There are certain 22 important provisions under income tax, which we will be discussing. We will not discuss the whole budget, but important provisions only we will discuss. And, just give me a minute. I will be sharing from the WhatsApp web. So Yeah. So now, just a minute. I will share the screen with all of you now. There are 22 key provisions we'll be discussing. So I'm sharing the screen. I hope now you can see the screen. So 22 key income tax amendments in Union Budget 2022. First is general tax rates for the individuals and corporates are now same. No indication around inheritance taxes and no charges, deductions or exemptions. There is no changes in deductions or exemptions as compared to the previous year. Second thing is effective tax rate on long-term capital gain is reduced to 23.92 from 28.5% because the surcharge on the long-term capital gain has been brought down to 15%. Third important change is about the cryptocurrency. Income on sale of cryptocurrency, that is virtual digital asset. Many clients we had, they have sold cryptocurrencies last year and we were not clear whether and they are taxable at what rate it will be taxable or whatever. But so now it is clear that we can assume that till now the tax was not there long term because now they have levied tax at rate of 30% without considering any other deduction. Only cost of acquisition will be deducted. No other deduction will be available like index cost and other deductions, investments, all those things will not be applicable. In case any client, anybody has paid taxes, we can even claim refund for that, I think. And all those who are having virtual digital asset like cryptocurrencies before 31st March, it would be advisable to sell them, encash them so that there is no tax on that at all. That is confirmed with this budget because till now there was no clarity on this. Now it is very clear. Next change is there will be TDS at rate of 1%. There will be TDS at a rate of 1% by the person who is buying the cryptocurrency. So anybody is buying the currency, he has to deduct 1% and he has to pay. Second thing is gifting of virtual digital asset. Now, I do not know because in cryptocurrency, to whom you are from whom you are buying, you are not clear. So how that will happen, I'm not sure. We'll have to be clear on that. How the TDS will be deducted because we do not know from whom we are buying and to whom we are selling. Next is gifting of this cryptocurrency kind of virtual deposit digital asset will also be taxable as a gift in the hands of the receiver of such gift under section 56(2)(10). There one
it will be deducted by the exchange.
Haji?
TDS will be deducted by the exchange.
Acha, TDS will be deducted by the exchange. Okay. My friend Praveen Shinde CA is also with me, so he has clarified that that TDS will be deducted by the exchange. Okay.
Just like STT, no?
Like STT, but here who is the exchange, who is the thing, very not very clear now so far, because okay. So next very important change is that whatever errors are committed in the income tax return, earlier we could file revised returns within 6 months. Now also we can file revised returns within 6 months or before the assessment. But nowadays, with the technology, the assessments are come under section 143(1) are done very fast, and so the possibility of revising income tax return is substantially reduced. But now, because of that, if there is any mistake or error in the return filed, and even if it is accepted under section 143(1), those could not be corrected. But now they have given us liberty that even if assessment is done under section 143(1), we can upload the updated income tax return within 2 years. Means for the financial year 2022-23, sorry, for the financial year 2022-23, the return normal course would be due for filing in July 2023, and for tax service 30th September 2023, and after that even updated return can be filed up to March 2025. So next, so this is a very good state that we will be having option to file the updated return. But they have mentioned that option of updated return is not applicable if it is detrimental to revenue interest. Means
Also,
if there is any refund.
There are penalties or
Yes.
there are penalties.
Yeah, suppose there is a tax payable and we are not paid the tax and we are not filed in the original, then there will be some additional consequences like additional payment of penalty or some that will have to be. I do not know how much it is. Provision, how much is the penalty? That
This
is not
just because the portal was not opening. Na? This is because government wants the revenue. So this is just a technical, actually it's a technical adjustment just to open the portal use.
Yeah.
Because now the reports are coming, na?
Yeah.
AIS and all that. People want to revise.
Yeah.
So actually this will, the date we have to check. It maybe for the last year also this 2 years will be applicable.
Yeah, so we have to check.
It is from last year.
Assessment applicable from assessment to the
because reports,
122.
Because reports are coming now after we file the returns.
Okay.
So this is the technical administrative correction.
Yeah, this is because my friend is confirming that because AIS and PIS has come, as all of you know, around 15 December or something. It
By
came.
the time we already filed.
So
one more opportunity.
All that now this opportunity is given so that we can correct. Now there more information is available from the income tax side, so that can be considered and we can file the updated return. This opportunity income tax department has given to us.
Trusting the assessee.
Yeah, this will be like more of trusting the assessee. But the thing is that whatever the consequences are there, that will have to be paid, filed. But another thing is that we cannot refund just because we have not claim certain refund, and there is more refund because of this correction. That is not allowed, because it is said that the option of updating the return is not applicable if it is detrimental to revenues interest. Means what? If there is a refund, then you cannot file that because of the correction. Next is liquidation management. Deferment of appeal by revenue to higher court or Supreme Court on the question of law that is identical to the questions of law depending before High Court or Supreme Court. There are many cases where the department files appeal on the same criteria, like in case of cooperative housing societies, the interest which we were claiming exempt for so many years under section 80P. Now suddenly, since last 2 years or 5 years, department has taken view that it is taxable, and you are, because ATP is not applicable. They are saying that the cooperative banks are not cooperative societies. We are saying that the cooperative societies, means cooperative banks are also cooperative societies on which ATP can be claimed. So that was a matter of law. So the in such cases where they are taking a stand, and there's a identical question of law is pending before the High Court, then government should not file the appeal. So that is to reduce the matters in the appeal. Next is clarificatory and retrospective amendment is done to address that SACE is not tax allowable deduction. Maybe some people are claiming the SACE, educational SACE, as deductible expenditure. So that is not allowable. Second is a sunset clause for manufacturing at rate of 15% extended from 31st March 2023 to 31st March 2024. So that deduction 115 BAB section, which gives certain concession to private limited companies for manufacturing sector, they can pay tax at rate of 15% subject to certain conditions. That was going to come to end on 31st March 2023. That deduction benefit, now it will be applicable for one more year. I think this is done because of the lockdowns and the state of the disadvantage. Second is extension of date of incorporation for an eligible startup for exemption from the existing 31st March 2022 to 31st March 2023. Under section 80 IAC, the startups are given certain concessions, and there were certain concessions which were to companies which are incorporated before 31st March 2022. That date is now extended to 31st March 2023. Next is income of non-resident exempted as a result of transfer of offshore derivative instrument is entered into an offshore banking unit of the IFSC. Okay, this is also not so much of our applicability to us. Income of a non-resident exempted by way of royalty or interest on account of lease of a ship or in the previous year paid by the unit of an IFSC. This also is not so much applicable, so I'm not discussing. Income of a non-resident exempted from portfolio of securities or financial products or funds managed or administered by a portfolio manager in on an account maintained in an offshore banking unit. Praveen, is this applicable to us? What is the meaning of that? Would you share something on this?
Startup.
No, not startup. This is so regarding income of a non-resident exempted from portfolio of securities or financial products or funds managed or administered by any portfolio manager in an account maintained with the offshore banking unit. I think this also is not applicable to any of us. Next is tax holding, that is TDS at rate of 1% on payment basis or stamp duty value of the immovable property. Earlier only on payment basis it was. So if the stamp duty valuation is more than the transfer value of the immovable property, then TDS is to be deducted at a rate of 1% on the stamp duty valuation. This is a new provision under section 194 IA. Next is withdrawal of concession at the rate of taxation at 15% on dividend income from foreign companies with effect from 1st April 2022. This also is not so much applicable. Then bonus stripping on shares and securities is not permitted from 1st April 2022. Earlier, this was applicable only to mutual funds. Section 94. Praveen, would you like to share on this?
This provision was there.
This provision was there for mutual funds. Now it will be for shares also. Now, set off of tax losses and provisions are made flexible. for adoption of by public sector companies for facilitating strategic disinvestment, section 79. This also is not so much applicable to any of us. Reduction of goodwill from the block of assets to be considered as transfer. Some companies, they say that okay, that goodwill is lost, so they just deduct it from the block of asset. So, but now hereafter that all if it is transferred to somebody, that will also be considered as taxable and will be, capital gain tax will be applicable. This also is not so much of practical applicability to us. Next is no benefit of set off of losses allowable for on income discovered during search and seizure. Whenever there is search or seizure, the raids, income tax raids happen. Then though what they used to do, they used to set off the losses, wash forward losses against the income. So now that will not be possible. That amendment is section 132 is done. Next is rationalization of faceless assessment scheme along with the provisions of for assessment and reassessment, that some rationalization measures they have taken. Then even in case of transfer pricing and appeals, faceless assessments, that is also is in pipeline. So that is postponed by 2 years to 31st March 2024 due to technological constraints and upgrades. And the last, but not the last is the power of for the division for transfer pricing order is now clarified to be with the commissioners in charge of transfer pricing and not with the assessing officer. This also is not so much of proper practical use, but this is how I just wanted to share. These are the certain provisions which budget has brought in, and overall the budget seemed to be quite active, growth oriented, and I feel in coming years we will find this our intention of making India great country with becoming the trillion economy. So it is towards that, and our economy has done really great in spite of so much of challenges we faced in since March 2020. So many lockdowns and corona and so much of expenditure government has incurred on various facilities, and food grains were provided free or additional rations and all those things. So with that, this seems to be without any increase in the taxes, government has been able to manage and balance. Seems to be really professionally. Some people are working in the government, and I feel it is quite growth oriented budget, and we can look forward to make India really a very most powerful world leader kind of country in the economic area in coming years, next for 5 years, 10 years, we can see. And the most important thing is that perspective which is given in this budget is 25 years. They are looking for how India will be after 25 years, and from that they are started and they are doing best. We are also very proud that India is growing, estimated to grow at a rate of 9.2% growth rate. It's also a very good sign, and no other economies, even China has not achieved so much. They are 7% something. So we really have done very good under great leadership of Modi ji and his great team, and we really look forward. We really pray that he does enjoys good health, and we are able to, all of us, we are able to have great to see जो सोने की चिड़िया का जो देश था वो हम भारत को वापस देख सकते हैं, इसका मुझे पूरा भरोसा है आने वाले 25 सालों में. I would request my Praveen, my very dear friend, my very close friend, CA Praveen Shinde ji, and I would request him to share how he looks at the budget, what is his view of the budget. Yes.
Good. It's nice to see all of you taking interest in this budget, and the very next day, I compliment Ajay ji and your team Because budget is yesterday, and now I think this is the first meeting because all the professional meetings they happen after 4 days. So it's wonderful, and I am also happy that in so many years somebody is asking me opinion on the very next day because there is no copy paste. So now I have to tell you something from my whatever knowledge I have. So we are sharing our ignorance with each other. So anyway, as far as we are concerned, we were mostly looking forward to procedural amendments. So that has not happened, like to reduce the burden of our compliance. So that is a critical point. Macro level, okay, macro level we have understood that really because budget means if you remember every individual people there to salaried people they were now first time I think we are looking it as a country as a whole and the patriotic feeling is there even if people have not got their individuals have not got any benefits tax benefits like ATC or Mediclaim. All this we were at least Mediclaim we were because of this Corona and all that we were expecting that Mediclaim limit at least they should have made it 1 lakh rupees. The medical expenses, so that those things have not been taken care of. But micro level, as we have gone through the last year, is what we have. If the something is done for the entire country, naturally we are also part of the country, so we benefit. So macro level, I think this will bring because 5 trillion to 5 lakh crore to 7.5 lakh crore. That is the investment. So naturally, when the government invests in this, lot of employment is generated. In fact, in Corona period also, when I was with Ajay, I said, "Kharcha bada means you spend and individual level also." So this budget is that way good. But for our consultants, tax consultants, we wanted more procedural amendments to reduce our stress and compliance burden. So let us see. We have to see the fine prints, and I advise you to see the memorandum of the budget because memorandum gives the reasons. Because for every amendment there is some reason. So instead of these figures, you will just go through the memorandum forming part of the budget. So that will give you each amendments, the rationale for each amendment, and you will understand, and it will be registered in your memory forever. Thank you, thank you.
Yes, thank you so much, all my friends who are watching on the YouTube also. Thank you, and let us all pray for the best, and let us be confident. Let us give our 200% to whatever we are doing, wherever we are, and let us make our country the greatest economy, the model economy, which will be light of